Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, December the 6th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having that out of the way, let's get it on. Not a whole lot of economic data, but we do have some what is looked as not great economic data across the pond, but we did get German factory orders, came in at 0.5%, expected to be a drawdown or a negative 0.2%, I should say. And last month's number was revised from 1% to 1.2%. So that is better than expected. So it's notable to talk about. Here in the United States, we got ADP non-farm payroll. This is a number that isn't as widely looked at by economists and or traders. It is an important number because it gives us a little bit of an early window into what the non-farm payrolls is going to be for the unemployment rate on Friday. That was supposed to be released last Friday. It didn't have enough time to compile the information, so that comes out this Friday. But the ADP, a lot of traders don't really look at that because it's in the past been way off. It's getting a little bit better and closer to the mark now, so I think it's something notable anyway. It came in at 190,000, expected to be 189,000, so that means that's how many people were hired. Then we basically have the crude oil inventories number came in at a drawdown of 5.6 million barrels, expected to be a drawdown of 3.2 million barrels. They didn't revise last month's number at all. The overall market acting a little bit bearish despite the fact that we're seeing higher demand in a sense. That being a drawdown decreases supply, but crude oil moving down. I've talked about this. I think we're going to start to see more crude oil inventory drawdowns due to the growth that we're seeing across the manufacturing sector and the United States economy starting to pick up a little bit of steam. So this could be just a little bit of profit taking going on. Opportunity a lot of times that big funds, when they see a bullish number, will take that opportunity to sell some profits and cause the overall market to come down because a lot of other ancillary people are coming in and buying that. So it just gives them an opportunity to offload maybe some of this big gains from 45 on up if they've been riding it out that long. Anyway, let's look at the rest of the overall markets. We've got gold futures off just a little bit from yesterday. Actually, it's in positive territory from yesterday's daily market, intraday market close, just up by $1. But as you can see, overall, the market looks down here. The key note here is yesterday, it looked like we blasted below that 200-day moving average. That wasn't going to act as support, so I thought we were going to see this 1250 a little bit earlier. Late in the day, we got that rally to settle back above that 200-day moving average. But again, today, we are back below that. So that should act as resistance on the way up. But I'm sure the bulls or gold bugs even will try and get it to settle above there to keep that as a support for them. Right now, we are below that, though, as of right now. We've got the bonds continuing to buck the trend up 22 ticks, about 10 ticks away from a full point. It's going to find a lot of resistance here. As you can see, it's found resistance in the past. Just can't really go much higher, especially with economic data that we're getting being as good as it is. Even the crude oil inventory is showing up with that drawdown should give an indication of an overall economy that's doing rather well. That would lead us to believe that the FOMC is going to raise rates. If FOMC raises rates, that means the bonds have to go down. They are bucking that theory right now. Then on to the VIX. VIX is slightly in positive territory despite the fact that we've seen the equities trying to push a little bit higher. Dow kind of getting rid of that theory, I guess, right now down 32 points. but they did open up higher and moved higher. We got the NASDAQ, with the trend we've seen lately, tech rotation, out of tech rotation, or a rotation out of tech into some of the staples and the blue chips. Tech now starting to get a little bit of a bounce, which is good because I have quite a few longs in my account right now that I would like to see some of this tech sector start moving a little bit higher. And then we have the the E-mini S&P is just slightly down on the day. When I started this video, they were actually in positive territory. They just moved into negative territory. This is a look at the 30-minute chart of the E-mini S&Ps. As you can see, when I started this video just a couple of minutes ago, it was in positive territory, just moved down. Quiet day, though. Yesterday, though, the interesting thing is we're starting to see this happen in the equities, and heading into the close, we're seeing a lot of sell-off at the end of the day, which to me is starting to look very bearish, that people are kind of day trading this, don't want to really hold anything into the new year necessarily, so cleaning up a lot of positions, causing that overall market to really sell off. A lot of these institutional investors will try and take a lot of profits going into the end of the year. Basically, is marking their books, make it look like they did very well. We've had a very nice run throughout the year, so why not take profits so that they can actually show a positive P&L in a sense, and show their investors, hey, look, this is how good we did last year. Because if you have an open position, it is just paper, and you can't really say that that was a positive gain. So we're seeing a lot of those guys taking profits. That could be also what's causing this overall market to sell off at the end of the day, heading into the new year. Then XLK looks like it's trying to get back into this trend line. Yesterday, if you guys remember, I put on a bullish trade in XLK a couple days ago. It settled below the trend line. I wasn't too concerned because we got this 50-day moving average moving right lockstep with that trend line that I had drawn way back at the beginning of the year. It's bounced out a few times, but managed to make its way back in it. Now it's broken below. The last couple of days settled below there, and now today we're trying to peak back up in there, and that would be really good for my bullish position. So as you can see, this doji here is actually looking like it is creating a bottom. Now we get this, we could get confirmation to the upside. That would be a nice bullish move there. I haven't really done anything today. I've got a couple of working orders, like in Philip Morris, trying to get out of my short, my 90 puts in January. I was short those puts, trying to get out for 50% of my max profit. I'm about a nickel away right now. So haven't done a whole lot in my margin account, but I just wanted to go over some of these things that are starting to turn around. Amazon, I'm also short those 995 puts, which are way down here. We just have really high implied volatility, as you can see from the implied volatility chart here, and it's starting to come off. So I'm getting directional move, volatility coming out. That's good. MasterCard got into this yesterday, starting to make a move. Looks like a bottom here as well. Similar chart to that Amazon, and making it look like there is a confirmation to the upside. I have a tendency to get into trades a little bit earlier than most. As a matter of fact, with this Visa trade, I'm not right around break even right now. The MasterCard's doing very well, but I got into this Visa a little bit early, thinking that it got sold off. When the overall markets, if the interest rates increase, is going to do well for the bank sector, Visa, anybody who's tied to interest rates for their profits. We finally gotten a little bit of confirmation to the upside. So both of those trades kind of turning around, which is nice. And then I think finally I already talked about the Philip Morris trade. So that's about it. Just kind of keeping an eye on my trades right now. Haven't added anything. Haven't found anything that's really jumping out at me to add on. Yesterday I did a webinar with the Tiger Shark. Those guys had festival traders. We had like 8 traders on there talking about different ways to trade. I was talking about implied volatility. Some other guys were talking about different chart setups. So you can check that out, get that video sent to you. Just go to protraderstrategies.com and we'll send that out. You can go to trading@protraderstrategies.com. Also, Friday's webinar is going to be on long puts and when and where we should set those up to take advantage of the environment directional assumption, and volatility. So go to protraderstrategies.com, sign up for that. Even if you're a trader that's been trading options for 5-10 years, I'm going to have a few little nuggets of advice and or ways to trade this that you probably aren't going to be able to find anywhere else. And if you're a newer trader, I'm going to make it simple enough for you to understand when is the right time to start trading these options. Okay? So go to protraderstrategies.com, and if you can't take that, take it easy.